What does a bank look at when you apply for a car loan? Stick around because today we're going to be covering the 5 biggest factors a bank considers before giving you a car loan. More on that starting now. The first thing a bank considers is your credit score. Credit scores range from 0 to 900. 0 being the lowest possible score and 900 being the highest possible score. The higher your credit score, the more favorable your financial terms will be upon approval. How exactly is this score established? That's determined by your credit history, both past and present. The 2 major ways a bank uses your credit history to determine your credit worthiness is by looking at your revolving credit and your installment credit. Revolving credit is debt that is automatically renewed as debts are paid off, like a credit card. The timeliness of a credit card payment can alter your score negatively or positively, and consistently making payments on time is a sure way to positively grab a bank's attention. On the flip side, making payments late or maxing out credit card balances will have the opposite effect.
Why don't you explain this to me like I am an 8-year-old?
Installment credit, on the other hand, refers to loans where fixed monthly payments are made over a set period of time. Common types of installment loans include mortgages, car loans, student loans, and personal loans. These loans will have an interest rate, repayment terms, and fees which will affect how much you pay per month. Installment credit is typically more important to a bank when it comes to a car loan because it's more relevant, since it shows a bank how you paid your previous car loans.
Why don't you explain this to me like I'm 5?
Regardless of revolving or installment credit, the more timely and consistent your payments, the better your credit score and history, and the more likely a bank will want to earn your business. Once banks have a snapshot of your history, it's then about your ability and stability, which means your ability to pay the new car loan based on your current income and debt obligations, and your stability meaning the length of time you've been at your job and residence. Essentially, banks want to make sure you can afford your new payment, and they do that by looking at things like money down, debt to income ratio, and loan to value, or LTV. Putting money down reduces risk for the bank and proves your commitment to the car loan. Debt to income refers to your debt as a percentage of your income. The higher your debt to income ratio, the more risky the car loan. Loan to value, on the other hand, has more to do with the amount you're financing relative to the vehicle that you're buying. For example, if a bank values a vehicle at $15,000, they'd prefer you stay as close to that number as possible in terms of total amount financed. Banks consider a higher loan to value as a riskier loan because it means you're borrowing more money than the vehicle is worth. This isn't a deal breaker by any means, but higher LTVs are usually reserved for those with better credit. Now that we touched on ability, let's talk about stability. Banks love when you've been at your job or residence for a long period of time because it shows you have a stable source of income and a consistent residency. Combine that with a high credit score and a great history report, and you'll have banks chomping at the bit to give you a car loan.
Okay, break it down in terms of, I think I'm getting you.
When you break it down into simplistic terms, a bank wants to make sure they're paid back on time with interest. And as long as the loan to value of the vehicle you're purchasing meets the guidelines, they feel your credit score, credit history, ability to pay, and stability of your employment and residency are the best indicators of your future behavior. I hope this video was helpful, and as always, thanks so much for watching. If you'd like to support the channel, please subscribe and hit the notification bell so you can stay up to date with all of our new content. I hope to see you in the next video. Until then, I'm Matt Blatt, and I'll talk to you soon.